Hi everyone, my name is Nikita Polishchuk. I'm the financial analyst at PHC Advisory, Tax and Accounting, part of DP Group. In today's video, I'm going to talk about significant changes in individual income tax in China, which are happening from the 1st of January 2022. I begin by introducing our company, DP Group. DP Group includes 4 companies: Dendra & Partners Legal Counsel, PHC Advisory, Tax and Accounting, Eastern Communication and Events, and Chance & Better Education. Dendra & Partners Legal Counsel is a law firm and a reference for companies that would like to enter the global market and be successful here. DP Legal Counsel is made up of professionals coming from different countries across the world, which ensures that clients receive the best service in different languages. Some of the practice areas of DP Legal Counsel include corporate and commercial law, M&A, environmental law compliance, PR, labor law, and others. PHC Advisory Tax and Accounting is an international consulting firm which specializes in accounting, taxation, and finance. Some of the main services of PHC Advisory include the support of back office activities of our clients, such as accounting and sourcing, tax compliance, payroll management, and treasury. We also assist clients with providing them with financial supervision and internal audits. Furthermore, we can assist our clients supporting their transactions, such as mergers and acquisitions, as well as relocation, restructuring, and liquidation. And finally, we provide business consulting on both personal and corporate levels. Eastern Communication and Events is an international agency which specializes in social media management, digital marketing, PR, and events planning. Chance & Better Education provides such services as short-term visits, admission and study abroad consultation, as well as language training. We're active in writing and publishing guides on doing business in China. These guides are available in multiple languages and can be found in both printed and ebook formats. In the same fashion, we provide our clients advice on doing business abroad in countries such as Vietnam, Italy, and Belarus, and these guides can also be found either online or in printed version. And these are just some. This slide shows the addresses and contact information of our offices worldwide. So, to the topic of today's presentation: significant changes of individual income tax in China. So just to begin, I will give a brief overview why this is an important topic to discuss. So just a short recap. From January the 1st, 2019, the new IIT law was implemented in China. First, it made the tax residents in China subject to their worldwide income subject to the Chinese IIT. For non-tax residents in China, they will be subject on China source income only in China respectively. Currently, there are 9 income categories which are identified in terms of the individual income tax. First, employment income, remuneration of labor services, author's remuneration, royalties, business income, interest, dividends, and profit distribution, rental income, income from transfer of property, and incidental income. What is important that, according to the new IIT law, for residents, employment income, remuneration of labor services, author's remuneration, and royalties now are combined in the comprehensive income. This comprehensive income is taxed monthly using different IIT brackets. This slide presents the progressive rates which are used in China for the purposes of individual income tax. China uses 7 bracket tax rates, and currently the highest tax rate on the individual income is set at the level of 45%. So what are the most 2 important changes, and especially for foreign individuals who reside in China, which are implemented in this law? From January 1st, 2022, first, foreign individuals will no longer enjoy housing, language training fees, or children's education fee subsidies in terms of the tax-exempt benefits. And secondly, the annual one-time bonus will be taxed together with comprehensive income. Let's take a deeper look in these two changes. First, let's begin with analyzing the tax-exempted preferential policies versus special deduction. The idea of the new IIT law, which was implemented in 2019, 1st of January, was to equalize the treatment of Chinese citizens and foreign individuals who are tax residents in China in terms of the preferences and benefits that they may have. From the 1st of January 2019 to the end of 2021, still foreigners could enjoy these special tax-exempt preferential policies, but from 1st of January 2022, such benefits no longer are valid. Let's have a look at what kind of benefits actually are changing, or what kind of benefits don't change at all. In fact, we begin from the bottom, considering the categories in green. So food subsidies, relocation fees, laundry fee, visiting relative expense, and traveling allowance actually remain the same, which means that by providing the relevant invoice to the company can reimburse the individuals, and such reimbursement will be considered tax-free. Of course, it's important to notice that such reimbursement should be within reasonable amount. Next, by looking at the categories in blue, in fact, these are the additions which previously were not available, meaning that health treatment for serious diseases, which starting from January 2022 include out-of-pocket medical expenses, housing loan interests, and elderly care will be tax exempt and will be additional benefits available to foreign individuals. However, the three categories in orange are the most significant changes. These categories include children's education fee, language training fees, and housing subsidies. These three categories previously were tax exempt, and from January 2022 will no longer be valid in their present form. Instead, they will be replaced by a different category, including for children's education fee, it will be replaced by a special IIT deduction over children's education only of 1,000 RMB per child per month. As for the language training fees, those will be replaced with a category named continuing education of RMB 400 per month for a maximum of 2 years for a degree, or of RMB 3,600 in total for professional qualifications education. Finally, the housing subsidies will be replaced with a category named rent fee of only RMB 800 or 1,100 or 1,500, depending on the tier of the city you are based in China. So these categories in orange are actually very significant, especially given the cost of living in the top tier cities in China, as well as the cost of education for foreign children in China. The second important change relates to the calculation of the individual income tax for the annual bonus. So before December 31st, 2021, it is not taxed together with salary, but it's actually calculated separately, meaning that after dividing the annual 1-year bonus in 12 months, according to the integrated IIT rate, for the monthly conversion, the applicable tax rate category is determined, meaning that essentially it is taxed outside of the comprehensive income, and the tax rate will be lower as if it is combined together with the comprehensive income. So what could be the potential solutions to these changes that foreign individuals will be facing in China from 2022? There are several propositions that we outline. First, of course, is basically splitting the compensation of key employees between different jurisdictions. This point especially applies to multinational companies who have offices and who have presence in various countries, and if a person holds a position in which he is responsible for various markets. In this way, it might be possible to actually split its compensation across different jurisdictions. Secondly, is considering setting up subsidiary in Hainan to enjoy the IIT cap rate currently set at 15%. As the Hainan is a special area in China, which is developed very, very extensively as a free trade port. It has some preferential policies, including the maximum IIT rate of 15%, which for senior management in China could be significant. The third solution is evaluating setting up small or micro unipersonal company to take advantage of a smaller CIT rate. This option is valid as long as these policies are still in place. Another point is considering potential deductibility of benefits in other jurisdictions, similar to point 1, and of course, mixing some of the above solutions together for further optimization. So, as a conclusion, some of the following remarks. The impact of the changes indeed will be substantial. Each benefit will cost almost twice to the company, or otherwise it will result in much lower net salary for the employee. As a result of that, it is very important to reach a consensus agreement between an employee and an employer before these changes of the IIT actually take place. And finally, of course, a thorough international tax planning ahead of January 2022 is key here. And this is a very important point. And in this sense, PHC Advisory is here to provide you the solutions regarding this issue.
And that's all for today's video. If you have any questions, please feel free to leave them in the comments below or send us an email to the address indicated in the description of this video. Thank you very much.